Welcome back. In today's video, we're now hearing that Jim Cramer is now bullish on crypto, saying he's using it as insurance against the $37 trillion that the US owes. And you guys know when Jim Cramer is bullish, that's typically a bearish signal. It's called the inverse Cramer index. And in today's video, we're going to be exploring what part of the cycle we are at, because as I've been explaining literally for months now, we are approaching, if not already in, the rotation phase from the bull market to the bear market. In my view, euphoria is already hit. We're starting to see some cracks in the market and the valuations in the market, not just the crypto market, guys, the stock market as well, with Nvidia at new all-time record highs, over $4 trillion. That one company is worth more than the entire crypto market, every coin, every crypto combined. Nvidia has a larger market cap. So are we in the froth phase of the cycle? Are we in the end stages of the bull market? Well, there's a lot of bullish stuff going on in the crypto markets, a lot of integrations that are happening with a lot of different cryptos. And in today's video, we're going to be exploring all of that, as well as Jim Cramer. We're going to be talking about Internet Computer, Kronos or Crypto.com, Solana, Hyperliquid, Quant, Chainlink, and much, much more. So make sure you guys are subscribed to the channel. Give this video a free thumbs up. We upload every single day to bring you the latest happening in the financial world. Sometimes we do deep dives into individual assets or stocks. And sometimes we talk about the macro picture, the macro environment, like what we're doing in today's video. So give the video a thumbs up. It's completely free to do. If you want to help support the channel, leave a super chat down below or click join or subscribe plus here on YouTube to become a channel member. To all of our channel members, thank you so much. Let's get right into today's video. So as you guys know, Jim Cramer is really a counter indicator. A lot of people view his calls and do the opposite, because a lot of times Jim Cramer will call things at the top, say to buy things at the top, tell people to sell things at the bottom. And now he is highlighting the $37+ trillion in debt that the United States is in, tweeting, "Buy crypto." They also asked him about this on CNBC at basically early October, end of September. And he said, "I say crypto is fine." Let's listen to exactly what he says here, and we'll break it down.
The folks, especially the younger people, who say that the future is crypto.
I say crypto's fine.
How do you value that? What is the sort of process with which you would use?
Well, I'm using it as insurance, and it's an insurance against the $37 trillion that we owe. Of course, we do have a government shutdown, but at least it's not connected to a deadline involving, refinancing for the government, which is really good. The government shutdown is not done at the same time as a possible cataclysm of not paying our bills. But I don't know. I think that crypto is, I'm not valuing it as fun. I'm valuing it as anti what the younger people think is our country's problems. They may know that one. Right. But then again, maybe my generation never has to see it, and their generation is going to have to live with what happens.
And that is completely true, guys. I mean, everything that Jim Cramer says is not incorrect. I do believe that we are at the end stages of the bull cycle, as I've been explaining over and over and over. And it's not just based on my opinion. It's based on the data. It's based on the halving tracker, which shows you the days since the halving, and historically around the 550-day mark is basically the end of the bull cycle for Bitcoin, as you guys can see on this chart. Now, people will look at this chart and they'll say, "No, Cryptoviser, it's different this time. I thought the same thing in the previous cycle and was wrong. People thought the same thing in the previous cycle before that, and they were wrong." The 4-year cycle is the 4-year cycle. This is based on the Bitcoin halving. This is based on money that's getting pumped in from before the Bitcoin halving in this cycle through today with the ETFs, with MicroStrategy, with all these other treasury companies. But again, we do still have $37.5 trillion in debt, and this is going to continue to rise. And so what is the counter for that? And Jim Cramer is absolutely correct. The boomer generation created this problem, and they're like, wait, our 5 pensions that we have and our $1 million home, you're telling us that we're not going to continue to get insurance and health insurance and get all of this? And it's like, whoa. What about the younger generations that are literally getting the end of the stick and not getting really anything? And so there is one thing, there is one category where you can counter all of this debt and counter all of this inflation and counter all of the devaluation. And a lot of people, including myself, believe that this is crypto. Now, this is over the long period of time. In the short term, right, in the 4-year cycle, we go through bull markets, we go through bear markets, we go through corrective phases, we go through uptrending phases. And that's how you can play the market to, increase the wealth even faster, potentially, if you know how to call the tops and call the bottoms. And a lot of people say, calling tops and bottoms is, a loser's game. But at the end of the day, on this channel, we called the top in the previous cycle. We called the bottom in the previous cycle before they even happened. And now we've called the top literally for 6 months. And people are like, Cryptoviser, we're not at the top. You're so wrong. And it's like, we started calling the top in July of 2025. And the price of Bitcoin went up a tiny bit more. I mean, we called the top at $110,000 Bitcoin. Bitcoin went to $125,000 after that. And people were on the channel saying, Cryptoviser, you see, you were wrong. That wasn't the top. And I'm like, 110 versus $125,000. It's not that big of a difference. We're not talking about $500,000 versus $110,000 top. And so, generally speaking, calling tops and bottoms in the market is a losing game. But if you understand how the cycles operate, you understand how the psychology of the markets operate, you can really leg up your investment portfolio. But generally speaking, in the long term, Jim Cramer is correct, because the boomer generation is moving on and the younger generations have to live with all of the inflation, all of the devaluation, all of the surplus. And a lot of the older generation are living on our dime right now while telling us, oh, well, you just need to work harder. And it's like, not really. It's just the inflation and all of the spending, and it's going to continue to exacerbate. And this is why, if you understand this is why people are in crypto. And this brings us to altcoins and all the other coins in the crypto space. And what is going on here? Kathy Wood is now saying that Hyperliquid reminds her of Solana in the early days. Jeez. What part of the cycle is this when everybody's hyping up a literal hyperliquidation coin? What is Kathy Wood saying here? Well, Kathy Wood has compared Hyperliquid to Solana's early stage promise, calling it the new kid on the block, saying it's exciting. It reminds me of Solana in the early days, and Solana has proven its worth and is, there with the big boys. Proven its worth how? You guys know I'm not a big Solana fan. A lot of the hype, Hyperliquid, a lot of the hype around Solana was just a puff of air. I mean, what has Solana brought to the technology this cycle? They brought us meme coins, the Haktua coin, celebrity coins that went to zero, an Argentina coin where they extracted $100 million from the market. And Javier Milei, the president, was like, coin is not what we talked about. I mean, literally, that's what Solana has become. And what we're going to be showing you is Chainlink, Internet Computer, Chronos, all of these other ecosystems that are actually creating real products on real platforms. And Solana is stuck in this meme coin, celebrity coin nonsense. And now we have a really smart, well-known investor, Kathy Wood, saying that Hyperliquid, which is literally a perpetual DEX platform, which only does well in bull markets, right? Because these things don't do well in bear markets, comparing Solana to Hyperliquid. So actually what Kathy Wood is saying is, Cryptoviser, you were right. Hyperliquid and Solana, there's no real difference between the two, because all Solana has done was extract value from everyone who used the platform, right? Now, obviously, people are going to say, but Cryptoviser, the price of Solana is very high, which we are at all-time record highs around the $250 range. But now Kathy Wood is saying Hyperliquid, which is also at all-time record highs, reminds her of Solana in the early days. Guys, these perpetual DEXs are actually what is going to accelerate the downfall and the move into the bear market. Because the more people who start trading perpetual futures, what did we see happen in the last cycle? The FTX crew that were using perpetual futures crashed those prices of those coins while they pumped the coins that they liked up, and then everything crashed after that. And so that's the part of the cycle we're at. Didn't hear Kathy Wood the entire cycle saying that Hyperliquid, it reminds her of Solana. Anyway, moving right along. Now, there are a lot of positive sentiment and positive things that are occurring and going on in the crypto space, including this. We are now hearing that Crypto.com, these pop-ups are crazy. Crypto.com has partnered with Sharps Technology to manage a $400 million Solana treasury and boost ecosystem liquidity. So what is going on here? Sharps Technology, which I don't believe is like the electronic brand Sharp, they announced a partnership to bolster Solana's ecosystem growth by deploying the platform's institutional-grade custody and OTC services to manage Sharp Technology's Solana-focused digital asset treasury. This company holds over 2 million Solana, valued at $400 million, with Solana trading above $200. Now, what happens if it comes under 200? Well, they take a big loss, right? And they're going to use Crypto.com's custody infrastructure, deep liquidity OTC desk, and execution capabilities to steward its holdings and deploy capital into Solana native projects to generate yield and expand on-chain liquidity. So effectively, they're going to be participating in the Solana meme coin ecosystem, right? Because that's the way to generate yield. They're using a Crypto.com and they're providing liquidity. When you provide liquidity, what are you providing liquidity for? Borrowing. So you're lending. So yeah, you can earn money, but remember in 2021 into 2022, what brought down all of these platforms? Excess borrowing, excess lending, excess trading. And this is part of the cycle where, again, most cryptos are kind of wavering, right? Most have not shot much higher than their all-time highs over the last 6 months. They've been just kind of sideways trading and really downward trending, right? If you look at most cryptos, I'm not talking about individuals, I'm talking about the market in general, it has been trending down. And so even though we may get little pumps here and there, it's trending lower, and we've seen, and so this is the part of the cycle where, in my view, this is the bull trap, right? Because the bulls are like, oh yeah, as Raoul Pal says, we're gonna have a 5-year cycle. As Cathie Wood says, this is the beginning of the new future of finance for hyper liquidation coin, right? And this is ridiculous. This is the end of the cycle. You can see that on the halving chart. And so obviously most of my viewers, you guys get it. You're very high IQ, but there's a lot of low IQ people that look at this chart and say, but Cryptoviser, actually this cycle is different because last cycle we did this and the cycle before that we did this. And it's like, okay, but we're in this cycle. We're not in the last cycle. I repeat this in every video and I still get people who are like, they don't get it and they're going to lose. Like, it just is what it is. There's winners and there's losers, high IQ, low IQ. The low IQ, they don't get it. They don't get it. They're like, no, Raoul Pal said this and Michael Saylor said this. It's like they could say whatever that they want, right? They're playing a different game than you and I are playing because they're playing with money that they're not going to be touching for a long time, right? The Bitcoin and MicroStrategy, they're saying they're not going to sell any of it. But anyway, back to this conversation. The situation here is these bull traps are very easy to identify in the market like we're in right now. We're in a bull trap, right? Because the bulls, they're so confident that we're not at the end of the cycle. They're so confident we're going to hit higher highs, which we may, it's possible. But that will just solidify their thesis, and then they double down even further. And even though the market's trending down, they just keep doubling down. And they're losing. How do we know they're losing? Because they have to borrow crypto. When borrowing goes through the roof and people start trading on perpetual futures and just futures markets and all these derivative products, this is an indicator of froth. And it's also, what Sharps and Crypto.com are doing here is very clear that they have to provide liquidity to the market. They're saying it's because of demand. Yes, it is because of demand, but it's because the demand is so bullish that they're willing to double down in a downward trending market to borrow more, to double down. And then if we go even further down, they're going to triple down and they're just going to keep borrowing. This is very risky. It's the same thing like going into the bank, getting a $100,000 loan, and then taking the loan to buy crypto at the top of the market. And so in my view, a lot of people are like, wow, this is amazing. Crypto.com made this partnership. In my view, this is like, whoa, whoa, whoa. The fact that they have to provide liquidity, the fact that they're chasing the yield and they're getting a yield, right? Not through staking, not through like safe type of investments, but by providing OTC desk and execution capabilities and on an infrastructure platform, crypto.com. No, it's a trading platform. So you guys, I think you get it. This is the bull trap. The bulls are taking out liquidity to double down. And so if we're at the end of the cycle, forget about what the bears are going to do, what the shorts are going to do. The liquidity is drying up. We know this. We've seen this. Meanwhile, we're now also hearing that Cronos, crypto.com, is collaborating with Amazon Web Service to enhance tokenization and drive a $10 billion real-world asset initiative. Here it is, guys. We've been waiting all cycle for Amazon to do something with some kind of crypto or blockchain provider, and they chose Cronos. They didn't choose Internet Computer, and Internet Computer didn't choose Amazon. Now, keep in mind, Internet Computer is trying to become, or they're a competitor to Amazon Web Service, and I don't think that they want to integrate with Amazon Web Service, which is totally fine. But Internet Computer needs to get to this level, right? Now, we'll come back to Internet Computer in just a minute, but let's understand what's going on here. Cronos, a blockchain ecosystem backed by Crypto.com, has inked a deal with Amazon Web Service, to the leading cloud computing platform, to open up its data infrastructure and AI stack to builders and institutions. As part of the collaboration, Cronos data will be integrated into Amazon Web Services public blockchain data, which offers scalable access to large data sets from blockchain networks, helping businesses and developers build blockchain-based solutions efficiently and without infrastructure overhead. And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up. Also hit that subscribe button. That way you never miss a new video. We upload every single day. The integration of Cronos data is expected to enable trusted, reporting-ready pipelines that support AI agents, advanced analytics, and institutional reporting workflows. The agreement is also aimed at supporting the Cronos ecosystem, as noted by the team. Selected Cronos builders will receive up to $100,000 in Amazon Web Service credits per startup to develop tokenization pilots, real-world asset platforms, DeFi protocols, and AI applications. Amazon Web Services commented, saying financial institutions require robust, secure, and compliant technology solutions as they explore innovative approaches to asset tokenization. By leveraging Amazon Web Service robust security controls and compliance framework alongside the Cronos blockchain, we're enabling both innovative startups and established institutions to build tokenization solutions that meet the highest standard of security and regulatory requirements. I have to take a sip of coffee for this one, because this is amazing for Cronos and Amazon Web Service, but this is not a good signal for Internet Computer. Because as we've talked about, Internet Computer is, out of the top really like 50, top 100 cryptos, it's the worst performing in 2025 by a large factor, right? Internet Computer coin is down about 50%. By the way, a lot of people are under the impression that Cryptoviser sold his crypto because on a thumbnail it said selling my coins and they didn't watch the video. These are those low IQ people that we're talking about, right? And by the way, it doesn't really matter whether I sold or didn't sell my ICP coin. The point is, the coin has been significantly underperforming as they've been deploying a lot of great technologies like their AI capabilities and their AI proof of concept, which is called Caffeine AI. But the issue here is that everybody in the ecosystem, all the holders, are promoting a software program that is not doesn't benefit you as a holder, is not owned by the Internet Computer ecosystem. It's a private platform, and everybody who's holding the coin is promoting a software that doesn't even live on the Internet Computer. Yes, it deploys to the Internet Computer, but it doesn't live on the Internet Computer. And so effectively, that's like owning Tesla stock, and then all the Tesla holders start promoting Ford or GM and saying, wow, Ford is an amazing company and my Tesla stock is going to go up if Ford creates a new car. It's like, what? Absolutely not. Ford is a different company. Ford may use some of the technologies, maybe with the AI and with self-driving that Tesla owns, but Ford creating a product as a Tesla holder, you're not going to go and promote Ford and say, wow, Ford should do better because if their stock goes up, Tesla stock goes up. This is ridiculous. And I feel like the smart money in crypto and the real big traders and accounts in crypto, they have sniffed this out and said this is BS. And we're at the end stages of the bull market, as I've been covering over and over and over and over and over. And we now have had a few launches of Caffeine AI, which again is the third party. It's not an internet computer owned ecosystem, right? Or software. If you own ICP, you don't own Caffeine AI. And you may not even be able to use Caffeine AI if you own ICP. So what are we doing here? What is internet computer doing here, right? They're all their eggs are in this Caffeine AI basket. And they're not doing things like this, and I get it. Amazon Web Service is a competitor to the Internet Computer's blockchain and network. I get that. But we have Kronos partnering with Amazon Web Service to do all these things, while Internet Computer's ecosystem is launching for the third time in October Caffeine AI, which again is not Internet Computer. I'm not an investor in Caffeine AI. I don't own any part of Caffeine AI if I'm an ICP investor. And so this idea that I have to promote it and I have to be bullish about it is bullshit. I don't have to be, and I'm not. And I'm actually very taken back by the ICP ecosystem and the community and even the developers, their inability to see this. And this is a huge risk. And again, I still hold ICP, but a lot of other people don't. And a lot of other people have dumped it. Again, down 50% year to date in 2025. And I think the reason is because they sniffed this out. We were too slow to sniff it out, to say, whoa, the only thing that Dfinity has been pushing out this year is Caffeine AI. And they're not even pushing it out as a proof of concept for what Internet Computer can do, because it can do a lot of the same things that Amazon Web Service can do, probably better. But instead of promoting that, the ecosystem, the holders of the coin are promoting a third-party product that they have no ownership in, no stake in at all, and doesn't even need the Internet Computer at all. Caffeine AI can run on its own whether Internet Computer is involved or not. And so Kronos is ahead. Kronos surpasses ICP. We just did a video last week. ICP leapfrogged by SWI. SWI, they're getting AI contracts as well. And Internet Computer is launching a product for the third time this year that is not even living on Internet Computer. This is a huge miss. I hope that it changes, but honestly, guys, we're at the end stages of the cycle. I don't think that anything that they can do can correct the price and the price activity of ICP at this point. I think that they put all their eggs in the Caffeine AI basket, and this is why they're launching it for a third time. Now, people are going to say, but Cryptoviser, it's not really a third launch. No, it's a third launch. There was a launch in June, there was a launch in July, and now it's a public launch. Those are 3 launches. And so all of their eggs are in this basket, and they have nothing else. Because if they had something else, the Dfinity developers and the ICP ecosystem, they would be deploying it. We would know about it by now. But the only thing that they have is Caffeine AI. And so the market sniffed that out, down 50% on the year so far. And Kronos is getting a partnership with Amazon Web Service. SWI is getting chosen by Google for their AI capabilities. And ICP is launching Caffeine AI for the third time. Moving right along, because it's one of the worst investments of the cycle. One of the worst investments. And I'm holding on because it's already in a huge loss, right? And yeah, I could take more of a loss or I can get out now. I haven't made that decision yet, but yeah, I'm still in ICP. Anyway, moving right along, another great thing that we're hearing about from another network, the Quant Network. The CEO of Quant Network said, "I'm delighted to announce that Quant Network has been selected to create a new payment infrastructure and bank technology for the UK's tokenized sterling deposits, a groundbreaking financial product infrastructure initiative led by the UK in collaboration with major commercial banks, including Lloyds, Barclays, HSBC, NatWest, Santander, and Nationwide." He said, "Our technology has been chosen for its proven capabilities, interconnecting and interoperating diverse systems and enabling programmability across different forms of money, building on our successful delivery during the RLN's initial experimentation phase. This milestone goes beyond improving payments. It's about enabling new forms of programmable money that will fundamentally transform how value is moved and managed. And one of the things to focus on here, interconnectivity and interoperability. Going back to ICP, they haven't even integrated any other form of interoperability. But Cryptoviser, there's chain fusion technology. Nobody gives a shit. That's one form of the technology. There's still no USDC native. There's still no native Tether. This is a problem. And the ecosystem saying, no, it's not a problem. They have chain fusion. That's the only thing. This is a signal. It's over. The cycle's over, right? The market already sniffed it out. Because look at what's happening with Quant Network. They're going to be tokenizing sterling deposits for the UK. And by the way, talking about interoperability, Chainlink is on a roll as we expected, as I've been explaining on this channel for months now. Pay attention to what Chainlink is doing, and pay attention, more importantly, to the networks that are not connected to Chainlink, because they don't get any of this advancement. They don't get any of this success. The chains that are connected to Chainlink, they will. And then we have other networks that are saying, well, Sergi wants too much money to integrate Chainlink. It's like, guys, there are brand new blockchains that just popped up yesterday that are already integrated with Chainlink. And then these projects that have been around for almost 10 years at this point, they're saying, well, Sergi wants to charge too much. It's like, what? What? It's almost the same thing as what's going on with Internet Computer and the inability or the lack of initiative to do other things besides just all eggs in one basket. Again, if you're connected to Tether, you're connected to USDC, or you're connected to Chainlink directly, your chain will succeed as Chainlink, USDC, and Tether succeed. Chainlink says, we're excited to announce a landmark technical solution enabling financial institutions worldwide to manage digital asset workflows directly from their existing systems using SWIFT. So now we have SWIFT, the global payment network, is integrated with Chainlink. With Swift messages and Chainlink runtime execution, banks and institutions can seamlessly access blockchains through the same Swift infrastructure they have relied upon for decades. But pay attention, because they can only access the blockchains that are connected to Chainlink. So all these blockchains are like, well, we can't afford it, we can't do it, we don't need it. Well, now they don't have access to any of the banks, and the banks don't have access to them. So what's going to happen to these chains? In my view, they're going to spiral into irrelevance. And there's a lot of chains that are not connected, by the way. The first use case involves UBS Tokenize, the tokenization unit of one of the world's largest private banks with over $6 trillion in assets under management. Subscriptions and redemptions for a tokenized fund, smart contracts, and UBS were triggered using this ISO messaging through CRE and Swift infrastructure. Now, listen, there's a lot of people who say, but Cryptoviser, people get into blockchain because they don't want to deal with the banks. Okay, do you want to make money or do you want to be poor? Because if you want to make money, it doesn't fucking matter. The banks is where the money's at. And the banks are not going anywhere. They may have less relevance, but they're not going anywhere. And so this idea that, oh, well, anything that touches the banks, we don't want to have anything to do with. Well, then you'll spiral into irrelevance because that's where the money's at. And so I don't know why anybody would think about it. Like, look at the comments on these posts on social media, people saying, oh, well, we don't need this. We don't need this. Why would you invest in something to lose money? Like, anytime you see something like that, like, well, we don't need the banks. Block that person, mute that person, that account, because the IQ level is so low. It's like they're investing in something to lose money. And there are people who do this. Like, I don't understand why, but that's the opposite of what we do on this channel. We're here to make money. But Cryptoviser, you're just fudding ICP. It's like the crypto is down 50% on the year. There's nothing to FUD. It FUDded itself. It literally FUDded itself. Anyway, moving on along. Also in Chainlink, they're excited to announce the major industry milestone in a global corporate action initiative led by Chainlink in collaboration with 24 of the world's largest financial institutions, including SWIFT, DTCC, and Euroclear. Corporate actions are a critical building block for public equity to operate successfully on chain. Building on the foundation established in the first phase of the industry initiative, they've now successfully demonstrated how Chainlink platform, blockchains, and AI can help solve some of the finance's most complex data challenges in a production-grade solution with unparalleled data security, this ISO messaging functionality via Swift, connectivity to DTCC app chain, as well as additional public and private blockchains, and much, much more. I mean, guys, this is where money's moving. Jeremy Allaire, the founder and CEO of Circle, which is the company behind USDC, he also commented recently on reversible payments for USDC, which some people in crypto were like, we don't want that. That's centralization. It's like, what do you think USDC is? It's a centralized entity. They've never even claimed to be decentralized. And by the way, the idea of decentralization to some people is like there's no central, guys, there is no such thing as true decentralization. Even Bitcoin network, right? You can look at the largest hash rates and the mining pools that are producing the most blocks on Bitcoin. There's like 2 or 3 mining pools that control over 50% of the Bitcoin network. If you think that's decentralized or full decentralization, I mean, there's elements of decentralization, but it's not full decentralization as most people would think. And so, again, you want to make money, or do you want to have full decentralization, which you're not going to get your money back if somebody steals it? Anyway, enough of Chainlink and all of that. We're also hearing from the president's family. Eric Trump says that he believes Bitcoin will surpass $1 million and Q4 of this year will be unbelievable. Let's listen to what he says.
And the future is incredible. The future is bright. The future is incredible. And I think fourth quarter of this year is going to be unbelievable for a host of reasons. So super excited.
How do you think Bitcoin's going to go?
I've always said that I think in time, Bitcoin surpasses $1 million. I think with quantitative easing that we're going to have starting tomorrow when the announcement's made, and all signs point in the right direction, unless this guy's really off his rocker, but then he's
talking about the
laughed out of
Fed.
this country. But I think starting tomorrow, you're going to see right drops. You see what's happening with M2, which is the money supply around the world, which is skyrocketing right now. Mm-hmm. Fourth quarter has always historically been the best quarter, or, generally the best quarter for cryptocurrencies.
Now, again, listen to what he says, right? He says in time, Bitcoin will hit $1 million, not in Q4. He also said, and then corrected himself, that Q4 is historically the best. It's not. I mean, if we remember at the FTX collapse, that was Q4, and that's when all of crypto cratered pretty hard. And by the way, the Federal Reserve, when they started raising rates in 2021, that was in Q4, and then the crypto market started falling. I mean, 30% from November to January. And so, again, Eric Trump can say whatever he wants. Michael Saylor can say whatever he wants. I agree that over the long term, Bitcoin is going to do fine. But we have a long way to go, and the cycle is the cycle. This idea that billionaires are now saying that we have a 5-year cycle and it's not a 4-year cycle because just look at this chart, look at this chart, look at this chart, look at this chart. It's nonsense. It is absolute nonsense. And people are unsubscribing from my channel for just saying this and showing you this chart, which clearly shows the last 3 cycles all ended before 550 days. The last 2 cycles topped at 550 days, and we are there right now and trending down. So this idea that we're in the last cycle or the cycle before that, we're not. We're in this cycle. And this cycle may be different, may not be different, but at the end of the day, it is what it is, guys. And I hope my viewers are preparing for a potential bear market, a potential drop in the prices, because we've already seen it in many cryptos. I mean, if we remove the negative 50% that we saw with ICP, even Bitcoin is trending down. MicroStrategy trending down. All of the other Bitcoin treasury companies not only trending down, cratering 95%. Look at Nakamoto. Look at some of these other Bitcoin and Ethereum treasury companies. Everyone's going to be chasing those highs. But if everybody's chasing the high, we're not going to hit the high. So let me know what you guys think about this video, about the analysis, about Jim Cramer. I mean, if you believe Jim Cramer is the counter indicator and he's telling us to buy Bitcoin now in Q4 2025, well, I was right. Top of the market has been hit. See you guys on the next video. Invest responsibly, do your own research, and crypto on.